Hey, Dave here. So when we look at our investment accounts, it can seem so unpredictable these last few months, really this whole year, right? They go up and they go down, and there's big swings in the market. There's an upcoming election, and it's just, it seems like a lot of uncertainty out there. And you might be wondering if you're doing the right thing. A lot of people are thinking that as they're seeing these ups and downs in their accounts. So one thing we know is that markets and account values, they do go down. It's inevitable and it's normal. But what's important is what you do during those times when things don't feel as good. So I'm going to go over 2 reasons why smart investors and retirees don't worry when the markets go down. And then I'm going to share how we help clients achieve this sort of peace and comfort in their investments and their plans. So if you can achieve these 2 things, then it's going to help you feel better during scary times, and it's going to help deliver a just peace of mind with your finances. And just so you know, it's normal when you turn on the news and you watch really just for 5 minutes, it's completely normal to feel a sense of worry or anxiety, because we know that this is the way that the news kind of wants people to feel, because it really, that's what keeps our attention is not the good news, right? And the media does a good job of doing this. Also, the financial media does a good job of doing this. They're having us really second guess our finances and think about, are we really doing the right thing with our financial plans? You know, I try not to watch it too much, but when I do, it's always questions of like, should I be in the market now or should I be out of the market? Really, they're playing a game that smart investors don't have to play. Successful retirees don't have to play that game. And I'll share why that is. So here are 2 reasons why smart investors don't worry when the markets go down. And this is coming from a perspective of how we plan for our clients. So number 1 is they're not invested the same way as the numbers that they see on the news. So back in March, we were seeing headlines about how the Dow was down 2,000 or 3,000 points, and the S&P was down 35% about at its low. And we know that we're not taking on the full risk of what the markets are doing and the plans that we're creating. And why is that? It's because we're diversified. We're not just in one sector or one country or one asset class, but we're really in a balanced mix. And that mix is all based on the investor and their income plan. Now, here's an example. I'm going to share this thing called the Callan chart, and you should be able to see this, but this is an example of really, this is the case for diversification. This is showing key indices and what they've done each year back to 2000. And we can see things like large cap, small cap, real estate, emerging market equities, and things like that, high yield bonds, and even cash. And as you can see, it really depends on the year. There's never a clear top performer, and there's never a clear bottom performer, but really it depends. And what this is saying is that this table highlights the uncertainty inherent in capital markets. So having a balanced and right mix for you is key. And there's really not one investment account that fits everyone. It's really personal finances is more personal than it is finances. So it really depends on you, the individual. Now, the second reason that smart investors and retirees don't worry when markets go down is because their investments and their investment plan is built on their income plan as well. So what this just means is that before every investment plan that we build, we know what sort of income the client needs each year. And then we make sure that we have enough in their conservative bucket. Now, that's conservative bucket's considered the safe money that doesn't get affected by these big market swings that we saw and hopefully we'll see in the future. And this is so important because if we know that somebody needs $100,000 a year and they have $500,000 in the safe bucket, then this gives them 5 years worth of withdrawals. And that allows our clients to feel better because they know that they can let those investments that are going up and down, they can let those stay invested and they don't have to worry about selling them when it is a down period. So if that makes sense to you, and if you'd like to get a better idea of how your plan is set up and if it's right for you, then you can head over to streamlineplanning.com and see if there's any times for a free planning session. We make some of those available each week. If you see something, then I'd love to talk with you and go over your plan. And if you have a friend who brought up concerns, or they're thinking about the economy or the elections or their investments, then please share this video with them, and hopefully it can start helping them think proactively about what to do during these interesting times. And I'll see you in the next video.